All right, so we have a down week, not quite a trend week lower, but may as well be. You have 5 days here that are down. You have open interest coming out every day, down 5, down 12, down 10.5, down 10.5, and down 5.5. For directional purposes, when we get into it, we're going to add this 6th day to it. I'll show you why in a minute. This makes it a trend week. These 6 days are a trend week lower. And when you get a trend week lower, you're supposed to go sideways to lower. Doesn't have to be pronounced, but you should not go back up. So that's one thing that's very friendly to the market. All right, so the first question to be asked is, who is this getting out? The answer is well, it's these guys, right? On the 21st, 24,000 contracts got in this up move. And on the 22nd, 18,000 contracts got in. So this is the big boys. There's a lot of people buying it, but that's some really big players. We haven't had 1 or 2-day combo like that in a while. Now, I'm going to throw some bullish statements out here, and I'll throw water on them as well. But the bullish statement is this. During the run-up, and we're not in that era now, but during the run-up, these type of days would be followed by sideways to lower, and people wouldn't get shaken out, and then we'd go back up. Now, this is a big lower move. Doesn't look it on the scale because gold's had such big ranges lately, but it's a pretty big lower move. So what do we have here? We have 42,000 contracts that get in here, and some other ones getting in or out, chopping around here. And now you have 5, 17, 27, 37 plus one more, 38, 38 and 5, 41, 38 and 5, 41. Yeah, 43. And 43 and 3, 46. So we're looking at the risk here simultaneously with the potential for a move higher. The market did this move to absorb over 40,000 buys. And it did this move to absorb over 40,000 sales. And the first thing you would say to yourself is, and you would be right to say this, is if you're looking at it just purely in terms of movement, well, it took a lot more for the market to go lower for the guys getting out. The exiting was harder to do than the entering. So the first thing it tells you is that there is selling above. Otherwise, the market would have run. And the banks aren't aggressively selling anymore. I mean, they're playing, but they're not aggressive. So they're selling above. And that could be producer selling, as I've opined. The second thing is you would say, well, it took a lot longer to get out than it did to get in. And I would say that's not as bad as it looks. It's not as bad as it looks. I'm not blowing smoke up your ass either, because everyone got in 2 days. And over the 5 or 6 day exit, people got out at different levels. Okay, so it was an orderly, but what you can walk away from this is during the red rectangle, that's an orderly sell-off absorbing monster selling. Now, you had an orderly rally. Well, it wasn't an orderly rally, but you had a capped rally here. So these longs are out. That's who that was. All right, next. The first thing I noticed was, the first thing I asked myself was, does Friday constitute a fish hook? And you're looking not at Friday. Notice I'm only showing the 5 days plus the 1 day, the sixth day. And the reason I'm showing that as a trend day, as a trend week meaning it's nothing but selling all in one direction going down, and it closes pretty much on the lows, is that on the fifth day, you had an alert or an alarm to be ready for a fish hook, and that didn't materialize. So day one down 5, day 2 down 12, day 3 down 10, day 4 down 10, day 5 down 5, and the market closes green. Now, the way we look at this is you're supposed to get long above that candle, and you might consider getting short below that candle, but it put it on the radar. Now, I didn't see it when it happened. So this is a failed fish hook. It's a false bottom, right? And we should leg a lot lower. Like, it's boom, and that's it. But the yellow line is the whole week, the whole 8 days. The whole 8 days. So here we go. Let me draw here a little bit because there's a lot of cluttered lines now. All right. So we've got the green fish hook fails, right? False bottom, boom, right? This day should have accelerated. This day really should have accelerated selling. Okay. This day should have brought in funds that wanted to push it down like really hard, and banks that would get out of their way. But that did not happen. It was sold. And then on this day, 14,000 longs get out and the market stops. Somebody bought it again. And where is it? It's the moving average. Now, I don't know who the buyer is. I'm not going to pretend I know who the buyer is. But open interest came in. So the buyer was probably the banks, shorts covering, right? I mean, there's probably new longs getting in there as well. But net, what you have here is you have a false bottom that becomes another fish hook, potential fish hook. And the market gets above here and it runs. Or you could say the market gets above there and it runs. So the conclusion is, actually, any questions so far before I go to the next level?
Yeah, Vince, I just threw a comment
Hey,
out.
Britt. Yeah,
Hey, hey everyone. That red candle, the third last day, that is Fed day. That is end of like last day of the month. So if anything, you just also in the back of your head have to be thinking this isn't a normal dynamics if all things being equal. So something weird is probably gonna happen in on the backside of that.
right. I would agree with you. The Fed day, uh, the Fed day does cause, it's a 2 day trading. It's a 2 day trading day. There's before 2 p.m. and after 2 p.m. And certainly that was a problem. You could definitely make the case that since we failed to go higher and ignite in that rally late in the week, the previous week, that as Fed day approached, longs got nervous. Okay, so yeah, it's definitely shenanigans going on, and by shenanigans I mean uh, not normal. So that 1 day, Brit, yeah, you're right. But when you do these analyses, you're supposed to not look at that 1 day. But the levels help. But that's a good point. That's a good point. Uh, False start instead of saying failed fish hook, call it a false start. Same idea. Um, Let me just read through this here. That repped in right. That's what you said, Britt. Even though they were smashing it before the Fed meeting, it was players front running, or am I misremembering which day the smash happened? Um, why am I spacing out? Hold on, let me pull up my daily. Pull up my chart. Let's go to the hourly.